one of those days.
I'm like, hello?
I think it's probably fine, but then I would hate for it to not be on. But I think we're probably fine. It's never been an issue before. I would just assume that how the day's going, it's going to be like the mic decided to be off.
Yeah. I don't want my hair like weirdly brushing it the whole time. So I hear, that'd be weird.
Man, technology though.
You're way more patient than me. I probably would have thrown it across the room at this point. So
yeah, my problem is I consume myself with it, and then it's like then I hit a wall. But whatever.
We're here. Mm-hmm. We've made it. Episode 4.
Yes, episode 4. Wow. Yep. Yeah, there's just so much going on in the real estate world that for you guys, it's like we wanted talk about so many things, but we decided like we'll try to keep it to one topic. Like obviously, we want to update on hometown heroes and maybe that the interest rates went up a little bit, but we'll try to focus on one specific topic. But yeah, so I'm Gibby Eagle. I work for Maxim Realtors in Southwest Florida. I've been in the industry for about 10 years and I love it. Very passionate about it. Love studying the market and love working with first-time home buyers. I love the excitement of it and educating and researching and guiding people. So we'll make sure we have all of our info for you guys, below if this is on YouTube. And yeah, you can reach us at Real Talk, Real Life, Real Estate at gmail.com if you have questions you want us to answer. And introduce yourself.
And I am Alexandra King with NRL Mortgage. I'm your local mortgage lender here located at Coconut Point, right above Tommy Bahama, Marlin Bar.
Where we're going after
this. I mean, it's been a long week.
We're prospecting.
Exactly.
Yeah.
Working hard. Working smarter, not harder.
Yeah, negotiating. Like, if you're new, we did start our podcast after a couple glasses of wine and decided we're doing it. So
yeah, exactly.
Wine does good things.
Why not? It's such a dad joke. I gotta stop with that. I love it. But yes, so I'm also very passionate about working with first-time home buyers. I mean, I always tell everyone that I can help anyone that's looking for a mortgage. But the reality is I very much enjoy slowing down and being able to explain the mortgage process from start to finish. So that way you actually feel like you understood what happened.
Yes.
So I'm all about the communication and setting the correct expectations to make the transaction as smooth as humanly possible. And that's one of the major reasons that Gibby and I reconnected and we're able to, realize that we're a really good fit working with one another.
Yeah.
We have a lot of the same ideals. We work very similarly and we have the same mindset of like our borrowers. You're not just a number or transaction to us. We relationally care about you.
Oh, for sure.
We care about the transaction. It's not just about the money at the end of the day. It's about making sure that this is actually a really good experience for you.
I love some of them that are a little bit tougher too, because it's rewarding at the end. Like we made it through and we saved everything from fires, so.
Yes.
So it's sometimes, of course there's ones that are easy and it's nice, but the hard ones that's when you're like, all right, I earned that.
Yeah. Oh yeah. And I feel like the market these days, because of how low inventory really is, and then the buyers that are really looking and with higher interest rates, it does make some of these transactions a lot more challenging.
Oh, absolutely.
Which is something we're actually going to be talking about today. And I know insurance has been the topic of, forever. But, with where interest rates are and with how expensive insurance has become, that is definitely something that we're seeing that is affecting a lot of transactions for a lot of these borrowers.
Yeah. So it's like you think, okay, based on a normal insurance policy over the last couple of years. And, you think, all right, let me run the numbers. Okay, affordable. But if you're not running like insurance rates up to like the last month or so, you're going to see a huge change. I mean, some of the stuff that we've been looking at, I'm like, it's almost a second mortgage, just for prices and stuff. So we think it's really important to make sure that, your figures almost as best as possible, as early in the process as possible, so you're not getting surprises and don't have that protection within the contract to walk away.
Yeah, no, absolutely. So something that I do, as a mortgage professional, obviously I want to make sure my clients are fitting within debt to income ratio. And a lot of the times I'm seeing with these, especially first time home buyers, things are really tight, especially using the Hometown Hero program, because there are different debt to income. There is a different debt to income ratio that's allowed with that program. You know, they cap us at 50, which for those of you who are like, okay, what does that mean? Basically, I can't go as high as I would with a typical standard FHA mortgage that stands alone. With a conventional loan, I can't go up to 50. So I actually have a cool story I want to share in a minute about saving a deal. Goes along with everything we're talking about. But all of that to say, I find it very important to get insurance quotes up front for my clients. Sometimes we have to shave off some coverages, which I don't love, but that's the market that we're in. And I always say, call your insurance agent when we're done with this transaction, and they will walk you through what you actually need and what you don't need, because I want to make sure my clients are appropriately covered. There are other moments where we're going to have to shave some things off if you want to buy this house to make sure that you are within the limits of the loan.
Yeah, absolutely. And that's the thing too, is like you pretty much can shop insurance up until 3 days before closing?
I mean, yes.
But I mean, you should really have it done, you know, in my opinion, is have it done by the time your inspection period is over. Like I recommend, like once you get that inspection done, get your 4-point inspection wind mitigation to provide to your insurance company, because you will need it depending on the year of your home. But you should do it within that period, because you have that protection to walk away for absolutely any reason. You could decide, wait, a better house came up, you know, I want to walk away, which I hope a lot of people wouldn't do that, because it's, you know, a lot of people involved in it, but you can. So like I recommend, once you get that wind mit, once you get that 4-point, shop insurance, get a few quotes, you know, just so, you know, because I mean, from what I understand, mortgage brokers work with different carriers and stuff. I know there's not much to choose from in Florida anymore, but you know, just get those quotes, because then you can understand the affordability of the home.
Absolutely. You know, and I think when you choose your mortgage professional, definitely ask them if they have a reputable insurance agent that you can, that they can work with. I mean, that's something that I always offer to my clients. I use Ashley Matita with Sunrise Insurance. She's absolutely phenomenal.
Yep. I use her for my quotes. I usually give at least 3 if they ask, you know?
Yes. I mean, I start with Ashley, but I always say, if you have somebody else or if you want a second recommendation, I'm happy to give it to you. But I typically already send my stuff through her so I can at least present, hey, I just want to let you know this is what this looks like.
I got you an initial
quote, because 9 times out of 10, I'm already getting that quote just to make sure that we're good. You know, I'm not one that likes to just be like, let's hope it works.
Yeah, absolutely.
And I also would say it's from a mortgage standpoint as well, and for the borrowers, make sure you ask your real estate agent if you're in a flood zone. If they haven't mentioned it, ask the questions, because it's happened where the real estate agents did not know that it was in a flood zone, or it was not disclosed. The buyers don't know. And then I don't know until I actually run something called a flood certification. But that does not happen until I activate your file with a contract. So I physically cannot run that until I have an address plugged into the system and we're live. So at that point, we've already lost a couple days. And I mean, that's really not advantageous for anybody when you now realize that, oh my goodness, there's going to be an extra monthly charge here. Like, can we even make this deal work?
Absolutely. Yeah. And that's why it's like important, like checking all those in the beginning. Like, I want to get the exact address, but if you can search on FEMA, and I think that's the issue too, is a lot of people don't know where to go to find those flood quotes. FEMA, you can actually search by address. So even if you are a buyer, maybe you're just browsing homes and your realtor has an answer without showing property, or you just want to know for yourself, like, I don't want a flood zone property. Hey, I know how to look for it myself. I don't need to wait on my realtor.
Right.
You can actually go to FEMA and you can search it by the address. So it's FEMA, FEMA.gov, and they have a map service center.
And that's spelled exactly like you think, FEMA.
Yep. So you can literally just go on, type in the address, and it'll pull it up for you. So
that's awesome info.
But what I will say is, if you do go on here, I had a client the other day, and I pulled it up real quick. I was not in a rush, but it was like, all right, like I just glanced at it, and the way the map was, I'm like, oh, it's in a flood zone. And then I actually zoomed in on it, and I'm like, oh, it's not, you know? So, but it's right on the border. So I just let them know, like, hey, it's not in a flood zone right now. but because of how they're remapping things now after Hurricane Ian,
Mm-hmm.
like I would personally recommend getting flood insurance just because if it does change, you're kind of grandfathered into a lower price because you're, already a customer. So like mine right here, this is, for example, my address. It shows you that I'm not in a flood zone, but right there it cuts,
Oh, wow.
So
Yeah.
for me, like example, and I also do too, I recommend to my buyers, even if they're not in a flood zone, to maybe look into getting flood insurance.
Mm-hmm.
Honestly, when I bought my home, I was like, oh, no flood zone, I don't need to have it, and really didn't think twice about it. And then my insurance agent was like, I highly recommend getting flood insurance. It's only $600 a year. I'm like, that's really nothing,
So think
So
about it, divided by 12. I mean, it's not
yeah,
really much.
and I'm maybe 8 houses, 9 houses from the river. So it's like, a freak accident, I could flood, and then what, So
Right.
$600 is worth it. But because I have that, I've looked at quotes recently for my home, and if I didn't have it, a new quote would be $3,000.
Yeah.
It went up a little bit this year, 798, but still, I'm like, I'm protected,
Yeah.
So I would even run quotes if you're not in a flood zone, just in case your designation does change, because it is possible. I mean, since Hurricane Ian, they are looking to remap again, and
Yeah.
just have that, just knowing that you're okay, you're covered, because we do live on a swamp. In my definition, I consider Florida, the whole state of Florida, a flood zone.
No, it's true.
So
And from a mortgage standpoint, sometimes, we can, if they're not in a flood zone, we might not be able to use flood, you know what I mean? Like we can't collect for that at closing. We can't.
yeah, so I pay mine
Yeah.
up front on my
Upfront,
own.
exactly.
Mhm.
So, but that's definitely a conversation. If you're thinking about it, you don't have to do
Yeah.
it right when you're purchasing the
Mhm.
home. You can definitely call your insurance agent
Yep.
back after closing and be like, hey, you know what? I'm actually feeling like
Yeah,
I
for
think I want to
sure.
go this route, and they can help you.
Yeah,
So
for sure. Yeah, it's
don't
just
feel super pressured, like,
yeah,
but definitely.
yeah. But if
it's
you're
great
one of
advice.
those people that's worried, like you can
Yes.
easily, if you have a good rapport with a insurance agent, or even if you're bringing it up to your realtor
Mhm.
or somebody, it's easy to obtain flood quotes now. Like you don't really need provide an elevation certificate and all that.
Yeah.
So it's just a lot easier to obtain just to have a quote. And if you do have an agent in like the Southwest Florida area, or Port Charlotte and stuff, we have a great option on the MLS, which I recommend doing. So I can run basic quotes for clients, and there's like a little water drop on it, so I can click it, and it'll give me public quotes and private quotes.
Very
So
nice.
I wanted to provide a couple examples just so people understand like like how much it has changed and the drastic number of it, because like we talked earlier about how it really can make a home unaffordable if you adding in that extra insurance.
Yeah.
And it could change your whole DTI and what you're able to qualify for, correct?
Yeah, I have a crazy story about that,
Yeah.
actually. I'll let you go first, and then we can chat stories.
I was running quotes for a buyer the other day, and he the home was in a flood zone, and I was like, let me run some insurance quotes for you real quick. And when I pulled them up, one of them was $18,000 for private, and then there was a $16,000 one, and then for public, it was only 6 or 7 grand. But still, like that's that's a lot of extra. That's 500. What the lowest is $500 a month adding on. So it's just important to make sure that you're getting flood quotes and insurance quotes ASAP, because that $500 is, especially with inflation, it's not affordable for everybody, for the average person. So, and then I ran one as well so this one's not in a flood zone. This one's about, center of Fort Myers area. The cheapest one is $4,489 a year, and it's not in a flood zone. So you're looking at about $375 a month. Oh no, excuse me, sorry, that was the highest, and the cheapest is $234 a month at $2,800 a year. So you can just tell just from where I'm at, and having the flood insurance before the flood 2.0 came out, I have such a bet, like $789 I'm paying this year, not in a flood zone. So you can kind of see how insurance prices are changing.
Yeah. Well, and something I want to add to that before I go into my story time. If it's super important to you to talk to your realtor, because if the person you're purchasing the home from has a current flood policy, you are able to
I'm so glad you highlighted on that, because I meant to and I didn't.
No, I didn't. Yeah. So you are actually able to take over their flood policy.
Mhm.
All they need to do is provide their flood declarations
Yep.
page, and you give that to whatever insurance
Mhm.
agent you are using, and they will handle the rest. It's
Yeah.
called being grandfathered in. So
Yeah,
if
it's
giving-
like assuming
so
assuming the policy.
if you were
Yep.
going to sell your house, somebody
Mhm.
would probably give you a hug
Yeah.
because they would be able to take over your $798 policy.
As opposed to $2,000-$3,000.
Exactly. So always ask that
Yes.
question.
Yes, and I'm so glad you brought that up because I probably would have remembered like halfway through. Like,
I got you.
meant to do that, but yeah, I've actually had buyers purchasing a home, and when the Flood 2.0 came out a couple of years ago, that's when they started to allow more of the assuming of policies. And my gosh, I think they saved almost $3,000 a year just on flood.
You want to know what else you can actually do too that I
What?
just learned about? So I learned this. If basically you actually can be grandfathered into the previous sellers. Let me explain this whole thing. Hold on. This is going to sound confusing. Unless I break this down, it's not going to make sense. Okay. So this is actually part of my story. Listen up. Story time. So I have these buyers. They're purchasing a home that from a LLC who have acquired the property in May because they do flips.
Okay.
So they basically purchased this property in May from somebody. They've redone it and they're selling it.
Okay.
We're going to talk about that in a minute. But because they've acquired the property in the last year, aka the previous sellers sold it to them in May.
Yes. Okay.
We can actually go back to the previous sellers to ask if they have a flood policy.
Oh, wow.
And if they do, we can take that flood policy for my now buyers.
Because it's still technically
within the year.
Ah. Okay.
So you can it's a really hard ask if you think about it because we're dealing with an LLC who are the sellers. I mean, we don't know if they actually know
and then
who sold them the house. And so it's one of those things where if you don't really have those relationships, or you didn't really know the realtors that were handling the transaction,
they don't have to answer,
They don't.
Yeah.
But just so everybody knows, that is an option because
That's
obviously
cool.
this LLC does not have flood insurance because they acquired the property to literally fix it up and then flip it immediately.
That's good to know.
Something really cool. This has everything to do with flood insurance. So because this property was acquired in May, did you know, a lot of people know this, but did you know that you cannot do an FHA mortgage on it until 91 days after the date it was bought? So the buyers that are coming in, there's a rule, the seasoning rule.
Okay.
So it's an FHA guideline. So basically these people, since they bought the property May 23rd, we would have to wait until August 24th. That would be 91 days before anybody can get an FHA mortgage on that property.
Wow. Is it because they originally signed for saying that because at FHA you have to acquire the property as your primary for at least a year. So is it kind of like
So I don't really know the ins and outs. I haven't done any research on it. It's literally just the guideline that I know for a fact. We could definitely talk about that some other time. For sure. I think it has everything to do with the ability to actually obtain an FHA case number, which is through the government.
Oh, yeah. Okay.
So they literally, and that's the whole reason, because an FHA case number will not be assigned until 91 days after.
Got it. Okay,
and
that makes sense.
because you can't assign a FHA case number, you cannot order the appraisal. You basically can't do anything with the loan. So what ended up happening is they had literally like 3 FHA offers on this property just sitting because nobody wanted to buy it cash.
Wow.
And so my clients, we got creative. We went Hometown Hero. I flipped them to conventional. And because they had help also from their parents, we were able to actually structure the loan conventionally instead of through FHA because I had a larger debt to income ratio using the Hometown Hero program.
Okay.
So I don't know anything about the other borrowers. They might not have been first-time home buyers. We got lucky in that standpoint. So we actually structured the entire loan to everyone's liking. And then guess what happened? No one knew it was in a flood zone.
Oh, no.
So this is the one I was just telling you about. Yes. So the realtors didn't know. The buyers didn't know. I found out once I activated the file. And mind you, I spent a lot of time being creative on this file to make things perfect for everybody. Like cash to close was perfect for the dad. Literally, they loved it. They were fine with the monthly payment. It was within the debt to income ratio of Hometown Hero. And I was like, I'm winning. Yeah.
Oh my God.
Long story short, we made it work. We're making it work. But I would just like everyone know, obviously, no one likes to hear that their monthly payment is going to go up by, I believe flood insurance was $3,000. So their monthly payment's going up like 250 bucks basically. So obviously that's not ideal for anybody. And I feel bad because we were already outside the inspection period. Granted, I mean, could I deny the loan? Yes, just because of how I structured things. But the point was they wanted this house more than anything. But just that getting hit with that after the fact when you were really
when
excited.
You're just like everything's going so smoothly.
Right. I felt horrible. So that's why I made the point earlier to make sure you ask your real estate agent.
Yes.
Look it up yourself on the FEMA website.
FEMA.gov. Because, you don't, your realtor, the realtor should be the one looking it up. I mean, everywhere we put in the MLS, everything is from third party, all the information, like do your own due diligence. Like your realtor should be doing that due diligence. And honestly, like within the last 2 years, the first thing I even do before, like my buyer will say, hey, I'm interested in this property. First thing I do, check for a flood zone. And it's just because I know how much that can change anyone's perspective, whether they're just terrified to be in a flood zone or they just really don't want to carry on the extra expense. Like I know it's 50-50, probably more so higher than 50-50 of people that are like, I just don't want to be in a flood zone. So it's like that could change everything, So
absolutely.
Oh, that's so terrible.
Yeah, I felt horrible. I mean, we figured it out because that's what I do. It's like solving a puzzle.
Yes, it is like solving a puzzle.
But I felt really bad because obviously then the borrower was not getting what the borrower wanted, aka the monthly payment was like $250 more than we originally discussed. But there's no way to know that unless you do your due diligence. I will tell you a cool story though about a seller. So, and here's the other thing that I'm seeing. We know that sellers know about flood zones because everybody's been talking about insurance and they know their property is sometimes harder to sell due to the fact that it's located in a flood zone because not all buyers are, like you said, super keen on living in a flood zone, or maybe it's a little bit tight.
Like being married to their mortgage or whatever it is.
So I recently had a deal where the seller actually gave a $10,000 concession. They were already going to help with closing costs because they were first-time home buyers and they were a little short. And then we found out about the flood insurance within the same period. I mean, the realtor definitely did her due diligence on this one. So because of the flood zone, I suggested to the realtor, I said, hey, listen, like we're going to be short because of all of this. I think you should ask for a 10K concession, see what they say. If they'll say yes to that, we can make this deal work. She went, the seller was like, not a problem. We'll keep the purchase price. We'll keep it at what I asked for. I'll give them 10K, concession, and we can carry on.
That's awesome.
We're literally closing Friday. So
that's awesome.
Yeah,
it's all about like just being creative and just like, I love working with people that work as a team. Like
absolutely.
We want to get to the closing table. Like, let's work as a team and get this done together. Absolutely. Like I've worked with agents where it's like, well, they just I understand you have your seller's best interest in mind, but sometimes it's about educating and just saying, hey, like this is what we need to do. Like, break it down for them, put yourself in their shoes, whatever it might be. And it's just like, it's awesome to hear that. Like, and especially, I mean, you're not even the agent, like you're the mortgage person and you're bringing in amazing ideas, and it's just like, hey, shoot your shot.
Might as well.
And then literally save the entire deal. And that's what I love about working with you is it's just like, it won't burn to the ground until that that if it does happen, you've tried everything you possibly could.
Absolutely, for sure. And that's one of the things that, being educated in this market and like you said, working as a team, like it's super important to be able to communicate, hey, this is what I'm seeing, this is what's going on, these are my ideas, what do you think? Yeah, absolutely. So, and too, like and I know there's probably real estate agents that will probably watch this podcast, and if you're newer to the industry, like when you get a listing, like ask the seller if even if they're not in a flood zone, if they're in a flood zone more specifically, but just say, hey, do you have your flood policy? Or do you have a flood policy? If they say yes, do you mind working on getting the paperwork for your declaration page? That way you have it. When you do have an interested buyer, send it over. So it's just important to just have that information, documents, whatever. Absolutely. And, like we said too, in the state of Florida, we're an as-is state, you do have an inspection period. The last couple of years, we saw a lot of times sellers would be like, nope, sorry, no inspection. Now you don't really see that. So state of Florida, normal is 15-day inspection period.
a lot of sellers are negotiating a little differently, usually around 7 or 10 days, which is okay. But like we said, have that inspection done as soon as possible, and even ask ask your agent to ask the sellers if they have a 4-pointer wind mitigation, because that can save you $400 or $500. So yeah, just make sure you're running insurance costs as soon as possible, making sure that you can afford it, that you are comfortable with it.
Absolutely.
Because if you're not, you can walk away during that period.
Absolutely. No, everything you said is on point. And what's really cool is next time we're going to have Ashley Matita actually from Sunrise Insurance come on the podcast, and she's going to kind of break down where the insurance market is and where it is going, not to obviously scare anybody, but just to educate and just kind of explain how things have shifted in the last couple of years with the hurricane, with just in general FEMA remapping all the flood zones, which happened before the hurricane happened. So, you know, it just so she can kind of give you guys an idea of what to expect if you are looking to walk into homeownership. And then obviously we're always here for questions too, mortgage related. And
I actually forgot, I wanted to highlight this too, just to understand too, like, you know, I'm going through it too with the insurance issue. Obviously I still have a claim out. Like we talked about, there's not a lot of insurance companies in Florida that will insure. And a lot of them are either going bankrupt or leaving Florida. So mine actually went bankrupt after Hurricane Ian. I had a claim out with them.
Were you UPC?
UPC. They offered me $1,000.
Oh.
$1,000.
You're like,
I need a new roof. Like my fences, like just, I'm like, this is at least $15,000, whatever. All I really honestly cared about was the roof, because I'm like, that's what's going to give me insurance issues, you know?
Exactly.
So, yeah, so my claim is still out, and I was up for renewal for homeowners insurance, and got a quote for, it was for $3,000, slide insurance, acquired UPC customer. So they're already covering me. Went up to $7,000. My homeowners insurance is normally $22,000. That's a huge jump, but I was all excited because I'm like, oh, cool, another policy, $2,200. And then I remembered, crap, I still have a claim out with UPC, and I need a new roof. I can't even shop insurance right now, because they're going to force me to come out of pocket and replace the roof in order to close, you know, in order for them to acquire me. So now I'm stuck with a $7,000 a year policy.
And fighting that insurance.
And fighting insurance, because, and there's nothing I can do about it. So I'm even having to suck up that extra, was it $500 a month?
I'm sorry. That's horrible. And I know so many people are in that
position.
So
many people, like almost everyone is probably up for renewal, and they're like, crap, like they're going to raise my insurance. You're and like, there's nothing I can do. So then I'm thinking, all right, I just either come out of pocket that $12,000 for my roof and keep fighting and hoping I get something for it, or I pay an extra, $5,000 almost in insurance a year. When I come out of pocket another $7,000, I could have a new roof. So it's like balancing that, like, is it can I afford to do it? Or, you know, otherwise I'm literally throwing away $5,000.
No, and that's like what you have to figure out, like what is best for you now.
Man, but
and then obviously once the roof is repaired, she can shop insurance.
I can shop new. But
it's like that frustration of like, what do I do with my hands at this time?
Yeah. Oh man. But I wanted to highlight on that too, because I'm sure a lot of people may run into that issue too. And
that's good. We should have, if you have insurance questions, we should have them email.
Oh, that's perfect.
For next week.
Okay.
For 2 weeks.
2 weeks.
Yeah.
Yeah. We decided to do bi-weekly because we both have a lot on our plates, and we posted and getting prepped, and then it's like, it's here again.
Oh my God. Hello. Yes.
It gives us more time. So.
Yeah. So for sure. But any question in general, but because we specifically will have Ashley Matita here, she's happy to answer any insurance questions. Or if you have, granted, she could probably answer a lot hypothetically, because a lot of the time, since she's just the broker, she's like the liaison between you and the actual insurance company. You know, she's not the one that owns Slide.
Yes. No, and I love her. That's why I love working
she's
mortgage
wonderful.
brokers.
But she can definitely,
or insurance brokers, and mortgage brokers.
Yes, well, she can definitely be very insightful, you know, with those specific questions if you really are trying to navigate the waters and don't know what to do. So
yeah,
for sure, send those questions.
Yes, I think that'll be great, because that's like our biggest.
Estate. Well, I'm saying it wrong.
Real talk, real life, real estate.
Don't ask. I swear I'm part of this podcast.
It's a tongue twister.
I'm like DACA, email.
But yeah, real talk, real life, real estate at gmail.com. You can email us if you have questions about insurance, which we'll cover on the next episode in 2 weeks, which will be episode 5.
Mhm.
Or if you have any real estate or mortgage questions in general, shoot them over because we'll make sure we answer them or cover them. And yeah. And before we go, tell them what's left on the Hometown Heroes.
Oh, guys. Telling you right now, if you're thinking about using this program, literally call us now. Actually, you should have called us yesterday. We are down to $36 million left out of the $100 million that was allocated. So if our predictions are correct, you should probably be under contract by September 1 at the latest to actually be able to use these funds. And right now, there is no conversation of when they're going to be renewed. As we talked about, obviously, this is going to hopefully become a self-sustaining program, but obviously that's going to take a couple years. But if I had to guess, we're not going to see new money until July 1 of next year.
Which makes sense because praying to God that interest rates are down by then, and people that do have the Hometown Heroes will probably refinance.
Yes.
So then it'll refilter.
Exactly. My prayer is that they allocate another $100 million next year to keep us going. But obviously, there's no talks of that just yet. Obviously, we'll keep you posted on it. But for real, if you were thinking about using this program to buy a home, now is the time to do it. So I know rates are a little bit high, but the reality is you can always refinance. So if you are struggling to have that nest egg for the down payment and closing costs, bite the bullet, take the 7% interest rate. And you know what? In 7-8 months, we can refinance you. And yes, you have to pay that money back. It would just get added on to your first mortgage payment.
Yep.
But at least then you'd be able to get rid of your mortgage insurance and you will have a lower interest rate.
Yep.
So you might break even with, depending on what, your loan amount was previously. But the reality is this. I can look at it for you and see if it makes sense. We'll go with that. But anyway, point being is just remember, it's programs here, and it's really amazing trying to get you into your first home. So,
and go back to our last 2 podcasts. We explain what a first-time home buyer is, because it's not really what it says.
Exactly.
First-time home buyer doesn't really mean first-time home buyer. And we also cover exactly what the Hometown Heroes is. And, so if you are interested in hearing more about that, go check them out.
Through everything that you need to know about what the program is, how you use the money, where the money sits, and everything like that. So, and how, if you are able to qualify. So, but so that's it. We'll see you guys in 2 weeks. Yeah. For more insurance talk with Ashley. Woohoo. Yep. Bye. And again, I'm Gibby and Alex. Have a great week. Thank you guys.